capital remains the most important factor when establishing, expanding, and growing a business today. However, the current financial environment has created a lending gap where access is out of reach. In addition, microlenders are often faced with a lack of financial data and analytics, which can lead to missed opportunities to identify new customers or markets for their services.
Higher interest rates can essentially increase the rate of defaults, as well as putting financial strain on our borrowers. Now, with that financial strain, it can lead to a cycle of debt, where borrowers are in a position to borrow additional funds to repay the initial, and that can be very problematic and cause financial hardship. But within the lending community, there has been some known to gouge borrowers. As far as transparency is vital for borrowers because it's essential for them to understand the terms of the loans that they're taking out. They need to be able to understand that to not only be able to pay back the initial principal, but also the interest that's tied to it as well. A lack of financial data and analytics, it creates two problems. Not being able to identify new borrowers and not being able to identify new emerging markets. Essentially, these are creating missed opportunities for a lending platform to be able to grow and stay competitive. With those two items, behavior is key, and we need to be able to identify that within our current borrowers or even new borrowers within the emerging markets. Without those two items, financial data or even analytics, how would you expect to grow a business model such as a peer-to-peer lending platform? You would be behind the competition, you would be behind even knowing where to start.
As issues throughout the industry further widen the gap, technology is becoming an increasingly important factor in providing access to financial services.
Technology is key when providing financial services for consumers. And I see that in two ways. That's creating accessibility and also convenience. When you have access to the online platform or the mobile app, you can access this anywhere, creating more accessibility. In Kenya, through technology, 65% of borrowers are women. And what's great is we're empowering these women to a better, sustainable situation of financial stability. And that's honestly what we're looking for, is to really empower these individuals' lives.
Digital infrastructure and innovative financing mechanisms have been particularly beneficial in developing countries, such as Kenya, where traditional banking services may not be available or accessible.
These are not mom and pop stores that we see in the United States. These are street vendors. These are people that have pop-up tents. They're selling consumer goods, foods, giving them access, allowing them to come in and have the opportunity to borrow money because they don't have any credit, they don't have credit history, they may have bad credit. But the key there is that they have access. And even though they have to start at the bottom, it means that maybe they can only borrow $10 to $20 at a time. But that gives them the opportunity to start building that credit history so they can get to a different tier within that borrowing system. So having the opportunity to borrow money helps them in their business and then helps them with their family at home. When you look at the microlending industry in Kenya, we know for a fact that there's over 380 companies operating in this business model, and everyone is succeeding. But there's still a big gap in Kenya. There's still, depending on what rag you read, whether it's a local rag from Kenya or a business rag here in the United States, there's still a $300 million gap in capital needed to help those individuals grow. So the more capital we can raise, the more we can actually lend out to borrowers and then overall help them succeed in their everyday lives.
Now, microlenders are helping underserved consumers gain access to small amounts of money that can help them purchase consumer goods to sell, which can be used to generate income and support their families.
For microlending industry, the companies that are involved right now, the biggest thing for them is to continue to process, continue to grow. It's going to be key that all of us look at banking software to move forward so that it's easier for these individuals to borrow money on a regular basis. If they grow in their business, that means they're being able to buy assets, means they're being able to sell it, and then they're able to make a profit and pay back the loans with interest. But at the same time, as they're growing and building confidence in the community, they're also helping their families. They're helping their families get education. that maybe wasn't available to them before. So all these things is kind of a circle, and if you touch on one and you get them going in the right direction, you get them to start building credit history, that allows them to grow in the community and their families grow.
By continuing to invest in innovative technology, microlenders can provide more efficient and accessible entry to financial services for underserved consumers, paving the way to a brighter future.
We're looking to vastly improve on what we've had in the past, but also build into the future of building more technology. That's the ability to have more of those services on hand, and that is furthering their situations to come to a better situation of financial stability.